Hello everyone, my name is John Locke. I'd like to welcome you to The Winning Trade, but first, the required disclaimer material. This presentation is given for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please be aware that your risk in trading options is substantial, and please make sure you are aware of all your risks prior to placing any trades. Also note that in this presentation, we will be doing hypothetical computer simulated trades. They're believed to be as accurately represented as possible, but keep in mind that live results can vary from simulated results for many different reasons. If this is your first experience with us, my name is John Locke. I'm a trading performance and success coach with Locking Your Success LLC, where myself and my mentors are here to help you win in trading and in life as well. And today I'm here to talk to you about high probability options trading. This is where we use the passage of time to make money rather than solely depending on price movement alone, meaning we can often make money whether the market goes up, down, or sideways. Now, this doesn't mean we're going to make money all the time, but it does mean we have a much better chance of being profitable than we would otherwise. Now today we have a very special treat for you. We are announcing the winning trading strategy of 2020. Now 2020 was a crazy year. We had some strategies that did fantastically well. We had some strategies that did kind of average. And we have had some strategies that didn't do so well for the year. But through this whole process, we share our knowledge, we share our experience in our Go membership and our Pro memberships about the trading strategies we have, as well as other trading strategies, and how to adapt to the market and how to become a winning trader over time. It's a really fantastic experience. So in this webinar, if you've seen us before, we cover 12 different strategies, and we will pick from those 12 strategies a winning trade for a particular cycle. We'll show it to you and how that worked. Now, in our Monday morning webinars, we cover all these strategies throughout the year, and we showed you the results on the last webinar, and we asked you to vote for the winning trading strategy or your favorite strategy for 2020, and we asked which characteristics of a trading strategy you value most. And I thought this was an interesting question. And obviously, when we show you the trading results for the year for each strategy, we have the performance results. But we also show you the strategy working out, and some of these strategies are very simple. Some of them are more consistent in their performance, and some of them have very high performance overall, but maybe sometimes are a little bit less consistent. And of course, we have, like I said, the complexity issue that some people are looking for something simple and some more complicated. So we had some very simple strategies that performed outstandingly well in 2020, and then of course we had our rock strategy, which is very complex, which nearly always performs very well over time. And I was kind of curious as to what type of characteristics people most favored in the strategy. And when we go over the results, we'll find out, was it overall performance, was it consistency of performance, or was it simplicity in execution? So our contenders were the Mighty Rock, the powerful V32, the time-tested M3, the reliable X4 version 14, the dependable M3.4U, or the pure and simple Super Bowl. And these were the results. Coming in 6th place was the time-tested classic M3 with only 3% of the vote. Then we had followed by the dependable M3.4U, which got 9.1% of the vote. We had the pure and simple Super Bowl, got 12.1%. We had the reliable X4 version 14 at 18.2%. We had the powerful V32 at 21.2%. And our winner for the 2020 winning trade strategy of the year is going to be the Mighty Rock, and that came in with an audience vote of 36.4%. So the Mighty Rock was heavily favored. Well, what does this mean? Well, it means when people are voting for a trading strategy, or their interest lies most heavily in the trading strategy that happened to perform the best for the year. And that was the Mighty Rock. And that surprised me a little bit. And the reason it did is because our most popular trading strategy, if you look through all our programs, the strategy that's traded the most out of any other strategy. In other words, what do people actually trade? What do they go in and they actually do? And it's the time-tested M3. The M3 is our most popular trading strategy, and it's the one that people stick with the longest and historically have done for the longest amount of time. Next in line for that would be the V32. And as you go up these trading strategies, probably the least common strategy I see traded is probably actually the Super Bowl. And the next least commonly traded one among our clients is actually the Rock. So even though this trading strategy, the Mighty Rock, has the most interest, it's interesting to find out when it comes down to actual trading and what people actually do. They actually like to stay with the time-tested classic M3 or the dependable M3.4U, as these are actually our most popular strategies. And I actually expected them to do better as far as popularity contest here we're doing with the vote for the winning trade of the year, especially since the M3 had the best year it's ever had in history. I expected that one to be among the top and possibly win for the winning trade of the year. However, the audience rules out, and the winner is the Mighty Rock. So the Rock is the best performing rule-based strategy that we have and the best performing rule-based market neutral strategy that I've ever seen. And that's because it's an adaptive strategy and it's traded differently depending on implied volatility skews. So one of the challenges we have with some of these strategies is it has a fixed defined rule set. We don't pay any attention to the market conditions. Therefore, we're doing the same thing, doing the same process regardless of what's going on in the marketplace, which is nice from a trader perspective because you don't have to think about anything. But the reality is sometimes doing one thing in a certain market environment and having that be the right thing to do, sometimes it's not the right thing to do in a different type of a market environment. And that can be very challenging, right? That creates a situation where your results are a little bit more inconsistent. Where if we have an adaptive strategy that changes along with different market conditions, it tends to do well in a much wider variety of market conditions than you can create from a single set of rule base. So that is the reason for our best performing strategy. This strategy requires a minimum of $5,000. We're going to do an example for you today, and that example is going to be a $50,000 example. We're going to have a profit target of 20%, or it's going to be $10,000 in our example size, and an exit loss trigger of $10,000 in the example size. So let's hop into, take a look at our December winning trade of the year, the Rock. Okay, so this is our December expiration trade. It is Wednesday, November 18th, 2020. Our December expiration is going to be 30 days to expiration. We're going to come in between 17 and 27 points below the market. So we're at 1784. That puts us with short strikes at 1760. We are going to enter an iron butterfly. And then we're going to do 10 contracts, 50-point wings. We're going to have a call that's going to bring our delta to slightly positive. Okay, if we are in a deep in the money call, we'll usually go slightly negative on our delta. When we're in out of the money calls, we want to go slightly positive. Now, let's see how this goes. All right, so let's just go to first adjustment. So remember, it's November 18th. Our first adjustment is on the 24th. So that's 6 days later. We're now 24 days to expiration. And as with what the Russell has been doing for much of the year, we had a very large up move from this point. So we went all the way up to 1854. That puts us well outside of what we call the tent. Okay, this is our tent area. And we're up a little bit of money with the move, but this calls for an adjustment within the rule set. Now what we're going to do is we're going to roll this up to essentially reset to a starting position. We're going to roll this up to 17 to 27 points under 1584. That is going to put our short strikes up here, all the way up here at 1830, so a very large roll. And We're going to be in here at slightly positive delta out of the money call. This is our next position. If we go to the next adjustment here, so remember we're on the 24th of November, we hop ahead until the 3rd of December, so what's that, another 7 days, and we end up in this position here. So the Russell actually went sideways for a while, which is kind of unusual lately. And we end up getting to minus 25 delta. We have a delta limit of minus 15 with the rock trade on a position this size. That being the case, we want to make an adjustment. Notice our call is at 1920. It's a 24 delta call. We can straighten that out by simply bringing that further in the money. So we went from up here down to our 1860 call. So now we have a 50 delta call here. That brings us, in this case, 2 flat delta for the position. And here's what the position looks like. If we go to our next adjustment, 4 days later on the 7th, the Russell takes off again. We end up more than 10 points over our long strike here. And what we're going to do is the same thing. We're going to reset to entry. And that brings us to 1870. Our call's now at 65 delta. We're at slightly positive delta here. And this is our position as of the 11th. So we are struggling a little bit to make money, and that's because if you look at the price chart, this is not market neutral, right? We are just continuing to go up. We did have a 3-day period where we kind of slowed down a little bit, but then we took right off again. So let's move forward here to our next adjustment. We're only 11 days to expiration, so things are going to start getting a little bit faster at this point. So let's go day to day. So if we go to the following day, we end up getting over our minus 15 delta. To correct that, since I'm already at 74 delta in my call, I'm going to sell 5 verticals. So I'm going to go here, go plus 5 and minus 5. I guess this would be buying because we're on the call side. And that brings us to slightly positive delta here. So let's watch that happen. And there is our new position. If we go to Wednesday, so we backed off a little bit. Thursday, we come outside the tent a little bit. And here we are, 7 days to expiration, or the Friday before expiration. Again, we are starting to bring up too much negative delta. We're not actually far enough for this to do a roll-up. So what we're going to do is we're going to do more verticals here. And in the process, when we adjust this up, right, so our delta limit's minus 15, we're at minus 33, we're going to make this up adjustment. We're going to look at doing this. And then at some point we have to start checking for our downside risk because we only are allowing a certain amount of downside risk in our T+0 line. And to be more specific, we look at like about an 8% move, and we take a look and see if we are going to potentially lose over $20,000 if we get that 8% move in an overnight gap, and we can't do anything about it. So when we look at that, we have too much downside risk. So to correct for the downside risk, we're going to make this wing smaller. We're going to take this, and we're going to go here. And then, of course, that makes our delta more negative, and then we have to become more aggressive with our verticals to end up getting a balance of downside risk and delta. All right, so in this case here, without going through all the work to get that done, we're going to end up with a 40-point wing here. We're going to end up with 4 contracts at 1880 and 6 at 1890. This gives us that balance. If we go into the following day here, which is Monday, we run into the same problem. We're not up high enough above our long strike to make a roll. So we're going to do the vertical. and that puts us here. If we go to the following day, we get a 41-point up move in the index, only 3 days to expiration. We're up only $884, but we're doing well considering that this is not a market neutral environment, not at all. So we are due for a roll here. Now from here, we have a couple of options because, as I said, the rock trade is an adaptive strategy, and it's also what we call a stage 4 strategy. And in our stage 4 strategies, we allow a little bit of flexibility in the rule set. So what we're going to do is we're going to do an entry test. If you watched the rock videos from before, and I would suggest that if this is your first time with us and you haven't seen this, you go back to thewinningtrade.com and watch the rock videos from before. We explain the strategy in much more detail. But for those of you who know the strategy, we do an entry test when we enter to see if we should be in what we call M3 configuration, which is what we entered in this time, or we're in rock configuration, which is more like a condor. And in this environment this year, pretty much for the whole year, we've been in M3 configuration for the whole trade. Now, we also do this entry test when we do rolls. And if I do an entry test here, then it allows me to go into what we call rock configuration. Now, I have the option within the rule set not to go into that configuration if I believe the market's moving too fast to not go into that. So when we cover this program on the rock trading strategy on the options trading for income Monday morning webinars, I make that decision real time on whether to do it or not. And here I was in a situation where it did trigger a rock entry, but I'm also looking at the market and I'm moving 41 points a day, and I know if I go into rock configuration and the market continues to move at that speed, I'm going to lose the trade. Now, that doesn't mean some people probably didn't make the other decision. Some people trading the strategy may have gone the other way. So what I'm going to do is I'm going to play out both scenarios from this day, from December 15th, and we'll talk about the next 2 days going into expiration. So if I'm going to stay in M3 position, which is what I did on the options trading for income webinar, the decision that I came to, then I'm going to roll up. I'm going to have this short strike 17 to 27 points below the market. I'm going to start with a 50-point upper wing, and then I'm going to start adjusting, right? If I were to do that, I would be way too negative delta. So if I'm going to start a new trade here, for example, and I were to do my initial roll up and stay with my 50-point wings, then I'm going to be at 1930 for these. And then I'm going to be at 1930 here also. And that's going to give me minus 226 on the delta. I'm going to start doing this to get myself somewhere under 100 at least. And that brings me to 71. Then I would do a 70 delta call. Right, and then I look at my downside risk and I say, whoa, I have way too much downside risk. If we get a 100-point overnight gap or it's 8% overnight gap, I'm way down under my $20,000 limit here. So I'm going to start shortening this wing and then making corrections here on my delta. Okay, and I'm just going to follow that process until I get to something that's acceptable, that's well balanced. And in this case here, that brings us to this position here, where I have a 30-point downside wing here, and I have my long strike at 1980, and my short strikes at 1960 and 1950, and I have an 81 delta call here. This brings me within my downside risk tolerance limits. It gets my delta balanced out, and that's the position that I would be in. If I go into the following day, the market went up a little bit. My negative delta got way too high, which is the case close to expiration. We got a very fast shift here. we're doing the same thing. We are doing verticals here, 1950, 1960 or higher if I need to. And then if my risk comes into play, I start narrowing my wing here. If I do this, I have to come to a 20-point wing. I have 5 shorts at 1965 at 1970. It puts me in this position here. Downside looks good. That's my position going into expiration day. And then if I go into expiration day, let me take off the trade here so you can see it. We end up in this position here, and we end up taking a profit of about $1,200, which is much less than my $10,000 profit target or my $5,000 reduced profit target that I have in M3 positioning. However, we did okay, right? We had a positive cycle. So this was a very, very tough cycle with this type of price movement. Now, I could have also gone the other way. I could have come back to this day here on the 15th and had this situation, and I could have done this. And we like to play out the alternative scenario when there's a decision here for our members, just to so they know each way. So here's the same trade to this point. This is a different type of adjustment. This is going into rock position, which was allowed. We go into rock position. I'm going to take this off. I'm going to close this completely, and I'll show you where we go into. We're going to go into this here. This is a condor configuration. It is very good close to expiration if the price isn't moving too quickly. And we are moving fairly quickly. So this is a bold decision. But if you make this decision here, we do an iron butterfly or 10 iron butterflies here at 1940. And then we're going to come up 40 points higher, and we're going to do some butterflies up here at 1980. So we have 10 at 1940, we have 5 at 1980. We have different delta limits for this configuration. They're much higher. Okay, I'm not going to go into all the guidelines here because, as we said before, the rock is the best performing trading strategy that we have year after year after year. However, it has a very high complexity level and a little bit of flexibility in the rule set, which we're demonstrating now. So this is our position here on Tuesday. If we go into Wednesday, you'll see we didn't get a whole lot of movement on Wednesday. That allowed us to gain profits very, very quickly. So you see how quickly you gain profits if it stalls. Now this did not hit an adjustment point, even though our delta increased. We allow a substantial amount of delta on our when we're in rock positioning here. We also allow a substantial amount of drawdown in the position, a little bit more than we would in the M3 positioning. And then we go into Thursday, which was exit day. Let me click this. And we had a substantial up move of 19 points. However, even with that up move, we gained up to $5,000 in profits here. Now, since this is expiration day, we are going to close this out, especially since with the size of risk that we have on either side here, we're going to close this out for a profit of about $5,100 or about 10%, which turns out a lot better. And again, that's a little bit lucky. We happen to have a stall for a day, but the reality is that's all it takes to gain this. And had we stalled for another day, we probably would have hit our original profit target or our high profit target number on this strategy. So that is the adaptability of the rock trade. That is the complexity of the rock trade, but it's also the fantastic, fantastic performance. And that was the 2020 winning trading strategy of the year, the mighty rock. If you like what you see, I invite you to come along and join us at lockingyoursuccess.com and discover how you too can follow along with this and many other great strategies as they unfold during our weekly Options Trading for Income update webinars. Also, where you can learn about upcoming winning trade presentations and explore past winning trades, and where you can receive free bonus material as well as our Trading Success Blueprint. And perhaps best of all, you can check out our free Trading Performance podcast, where you can learn to skyrocket your results in trading and in your life. If you have any questions or comments or anything that you'd like to see on the next winning trade, we'd love to hear from you. Please comment on the video below or give us an email or send us a message in some way. Also, please remember to like and subscribe our videos and share them with your friends so that everybody can get the great information that we're putting out here. And also, since this is the end of the year, I wish everybody a happy new year and a very prosperous new year. And I look forward to seeing you next year on the next Winning Trade.